What's up guys, it's Michael here, and welcome back to the channel. So in this video, I invited a tax expert over to review how do you deduct small business expenses, especially vehicles. So most of this information itself, you cannot get it for free. And lucky enough, I was able to find a tax expert who was able to explain the basics and details, and will not charge a fee for this service. So if you think this video is really helpful or you want more information specifically on tax write-offs and etc. when it comes to finance, please comment down below, like and subscribe. And I'll send a notification to other people and then they'll send a notification to me that you want to see this content. Because remember, this content right now, I'm providing you for free. Most of the times if you ask these questions or ask a tax expert, you have to pay money and it's not cheap, trust me. So let's get into it.
Let's talk about small business expenses related to vehicle. Vehicle expenses is one of the favored deductions. One of the most common deduction is car-related expenses because car is expensive and it's essential to business and the cost can be deductible. That can lower your taxable income. There are 3 ways to deduct auto expenses. One is the mileage method. And second one is the actual expenses for vehicle actually owned by the company or actual expenses for vehicle leased by the company. For all 3 methods, record keeping is essential. The biggest error or challenge people have when it comes to their vehicles is not keeping a detailed mileage log or a detailed expense report. For record keeping, odometer reading is one of the methods, or you can use apps on your cell phone to keep track of all the trips and the time for the deduction. Some people use reconstructing the mileage. That will be a little bit more time consuming in my opinion because you use the maintenance record oil change method to keep track of the odometer reading. Why are we doing this? The record-keeping purpose is especially for separating the personal and business use of vehicle. For mileage method, how to do mileage method? The mileage method is that you use the business use mileage of your personal car multiplied by the rate per mile published by the IRS. That will be the tax deduction for the business. You can keep the mileage log by writing it down for each trip to record the date, destination, the mileage, and the business purpose. You keep a log for that. That will be a record for the deduction. In most of the examination, if it's related to auto expenses, this is one of the items an auditor will request. If keeping a mileage log by writing it down is too much work, you can use cell phone app. A cell phone app that keep track of all the mileage and the day, the time, and for the business. There are many cell phone apps out there. You just need to pay for a minimum, or it depends on the function you need. You can pay for the subscription, and it's actually very handy. The second method is the actual expenses for car owned. So many small business buy a car under the business name, and it was the interest on the auto loan, the gasoline, repair, maintenance, insurance, license, parking and tow, or the space rent for car parking, and also a depreciation of the asset can be deductible too. And of course, if this company-owned auto also partially used by personal, that portion used by personal need to be added back to the user's income. It depends on if the company have a plan. The third method is actual expenses for leasing auto. So if a company leases a car, you can deduct lease payment, gasoline, repair, maintenance, insurance, and license, parking, and rent. But at the end, you also need to add back a lease inclusion, meaning that for a car, depends on the value and the time you buy it. The IRS have a table and require you to add back certain amount of the lease payment. So it's not 100% deductible, but the inclusion is very reasonable. So the difference between actual expenses for lease auto and auto owned by the company is the interest on the auto loan and the depreciation you can take for a car owned by the company, or you can take the deduction for lease payment less the lease inclusion for the car leased by the company. From time to time, people wondering if they should buy a car or lease a car. It really depends. It depends what kind of car you're going to get. So one method is use mileage method if the car is not owned by the company or leased by the company. So if you want to buy a car, if you don't drive often, your mileage is very low, lower than 10,000, or you drive very often, you drive 20,000 miles a year. So in that case, you're probably better off to buy the car because you can depreciate a car. You can take a depreciation deduction, and the deduction tend to be higher in the first 2 years. If you are going to drive a very expensive car, so it may be better off to lease a car because the depreciation is limited. When you have too high of a value in the car, the depreciation is not going to give you more deduction. But however, if you lease the car, then the lease payment probably higher. Even after the lease exclusion, your deduction probably still higher. So that's my personal experience. You please consult with your tax advisor. They will give you more detail.